Thank you all for coming this afternoon to the closing session of the 2016 Marijuana Management Symposium. I hope you all have enjoyed yourselves. I'm Molly Dupleshain, the Deputy Director of the Office of Marijuana Policy for the City of Denver. We've got a great panel lined up for you to talk about the financial impacts and employee safety, which might not sound like they fit together, but what we found is that having the resources is important to employee safety, which Sharon will go into. So we've got Stephanie Adams, the Budget Director for the Denver Budget Office. We've got Jeff Romine, the Chief Economist for the City of Denver. Sharon Davis with the Risk Management Office. And then Bob Dent and Don Court from the Denver Treasury Office. So I will let Stephanie kick it off.
Good afternoon. Thanks for sticking around for the last session, the most exciting session because it's about money. My name is Stephanie Kirianis Adams. I'm the Budget and Management Director for the City and County of Denver. I kind of want to get a sense about who's out there. How many of you are from a city or a county? Oh, a lot of you. Anyone out there from a state government? How many of you are in finance of some kind? Great. Okay. That just gives me a good. Any other budget people out there from budget office anywhere? Okay, this gives me a good idea. Thank you. I'm going to talk to you a little bit about the revenues from marijuana, which I'm sure you've heard a lot about, and there's lots of speculation and assumptions about it. So I'm going to kick it off and give you sort of a big overview and how we budget for those dollars, and my colleagues will talk a little bit more about some of the nitty-gritty about the economy, and then of course certainly the Treasury. That's where the real money is. Let me start by kind of painting the landscape of gross sales for you. This is a month over month. I know it's kind of hard to see in the very, very back, but it's just to show you a little bit of the trend line. Now the dark portion of that is actually medical marijuana, gross sales, and the light green is actually recreational marijuana. It just gives you, I will just say this, and I will probably say this a couple different times. This is a new industry to us. We continue to try to understand and do a good job in terms of understanding how to project it and what our trend looks like, but we don't have a lot of years of trend. And so this gives you a sense, since 2014, that's it's every month. And it looks like, we could probably safely say, it looks like summer is a big time for sales, but again, we're still learning, and certainly as other municipalities begin to have recreational or retail marijuana in their cities, this could change in some way. One of the things we do in the budget office is we try to predict and project. This is actually an interesting story because we anticipated that once retail marijuana became legal, that we would see a decrease in medical marijuana. That was not actually the case. This is the proportionality of medical to retail. There's a small shift, we think, this year, and a little bit of flattening in terms of medical, but in general, what we have found is that they're about half and half at this point in terms of gross sales. This next slide talks more about what a consumer might see when they purchase marijuana. So this is actually the taxes overall that the consumer actually pays. So what you'll see is the largest portion of that is actually the state special retail marijuana sales tax, just 10%. And then there's also some other just standard sales tax, both the state standard sales tax, RTD, our Regional Transit District tax. We do have a sales tax, again, on every good for our cultural facilities. And then Denver, of course, applies the standard sales tax. In addition to that, you've probably heard over the course of your time here, we also have a special retail sales tax that went to voters and was approved, and that is 3.5%. So in total, it's a highly taxed commodity in Denver and in Colorado. So retail tax in total is taxed at 21.15%. 7.65%, by the way, for medical marijuana. Again, that's just base tax. Any commodity in Denver would be charged at that rate. This is, now we're just drilling down into Denver's revenue. This slide shows both. Now, so what you'll see is 2014, 15, and 16. It is to show you a little bit about what we projected and what we actually brought in. So we continue to get better at this, I think. But these revenues generated about $19 million to $30 million annually from 2014 to 2016. Actual revenues have exceeded our projections. We're continuing to refine our projections. What is not included on this side, as a side note, is we don't, in this particular slide, it didn't include licensing fees. Just like other kinds of businesses, there's a license associated and licensing revenue, and so that's not included in this particular slide. So again, we have that base sales tax and then the special retail sales tax. The state also provides us with a share back as part of their 10% sales tax. As a side note, we also collect tax on behalf of the Denver preschool program. For those of you who are not from the Denver area and are unaware, we have a universal preschool program for 4-year-olds in Denver, and so they are part of our normal tax base rate, and so we're a pass-through, and we pass those dollars. They, in 2016, got about $734,000 as a result directly of marijuana. So though $30 million in marijuana tax revenue this year may seem like a lot, it actually represents a small share of the total general fund and sales tax revenue. We have about a $1.3 billion budget going into next year. Marijuana is about 2.5% of our overall general fund revenue, and about 5% of our sales and use tax revenue. And our sales tax is about 40% of our total general fund. Now, having said that, I will say that when we look at our sales tax, we track growth. And of course, you won't be surprised that marijuana tax growth has been pretty relatively strong compared to other tax revenues. We're projecting for 2016, by the way, for it to grow about 20% over 15. So where does it go? The dollars actually go into our general fund. This is a constant point of conversation. It is a general fiscal policy in the city and county of Denver where we have the opportunity to make sure that we have the flexibility to actually deposit revenue. We do it in the general fund to provide us ultimate flexibility. In fact, well, I'll talk a little bit later. When we wrote the ordinance around the special tax in particular, we wrote language in to allow us to use those dollars in a very broad way to better the city. So all tax revenues and licensing fees do go into the general fund. Just like, again, any other business, the licensing fees support our excise and license process to process those transactions. And like any other commodity, standard-based sales tax goes into general fund. And I think that what you'll see on this next slide, well, actually this slide, when you see that it goes to all these different agencies, I think for those of you who have worked in city government and understand city finances, recognizing the importance of being able to be flexible within each of those agencies is important. So in other words, a lot of our agencies, let's just say that our community planning and development, they have inspectors, and those inspectors may not exclusively do marijuana inspections, and so being able to provide those dollars as part of their work plan is a much more, we think, efficient and effective way to leverage those dollars. So when we went to voters in November of 2013, we asked them to approve this 3.5% special sales tax, and we told them we would use it on regulation, enforcement, education, and here's that phrase I referenced earlier, and for operating and improving the city and its facilities. We did not identify a priority. We didn't say we would do something first, or we didn't identify a proportionality. In lots of ways, that was because it was still really new, and we didn't know exactly how much it would take us. And so we did identify those big areas and talked a lot about how we were going to support that. And one of the probably big examples I can offer you around the operating and improving of the city and its facilities is we did at the end of 2014, when our revenues outpaced our projections, we used $3.2 million in retail marijuana revenue to support a new rec center that we were building in Denver. I also think, and this is actually from Molly's notes last year, thinking a little bit about what the priorities are for the city and being able to leverage those dollars to support the priorities of the city. Education's a good example. I don't know how many of you were able to go to the youth programming, but one of the priorities for our mayor is supporting youth. And so being able to then add this on, and even though it's a specific approach around healthy lifestyles, recognizing that it was part of something bigger, this allowed us that flexibility to address that. So I'm still talking about budget, by the way. This is how we have budgeted the dollar. That just gives you a sense. We continue to slice and dice it in different ways to show how we are budgeting the dollars in each of those areas that I showed you earlier. Molly, these will be available to folks later on. I know it's probably hard to see in the very, very back. And these are the agencies which receive those dollars that I showed you previously. So in 2016, we actually do identify specific FTE, not specific people, but FTE in each of our agencies. So there were 33.5 FTE supported by the special sales tax in 2015. We did increase it by about 17 to about 50 in 2016. And we do, as part of the budget process, as agencies submit their requests for the upcoming year, those requests that are specifically identified to be needed as part of marijuana enforcement regulation, we work with the Office of Marijuana Policy and ask them to help us prioritize those things, help us to understand the kinds of needs that our agencies have in order to address changing legislation or changing situations in the community. And I think that the fact that it goes through the same budget process, I think, really provides us a lot of credibility that it has the same level of filters and it's considered as part of the entire budget process. This slide shows you a little bit about again, I'm focusing on the special tax, the 3.5%. So in 2015, the revenues are actual, but for 16 and 17, of course, they're projected. So when you compare the actuals to the budget, there's a little bit of a gap. In 2015, we used the share back, I would say, I'm sorry, I'm doing it backwards. There's a little bit of a gap. We still are able to really leverage our overall city funds to address some of those things. Sorry, I just changed the slide before I came. It's the other way around, right? So in 2017, we're planning on bringing about $10.1 million in the 3.5 special revenue, the special tax, and we've budgeted about that amount. So we try to account for it in the actual budget book. We just worked through that, and actually it's in the Office of Marijuana Policy. It's actually both in that particular section as well as in each of the agency sections. You can see that affordable housing doesn't necessarily fall into those big categories we talked about, but that is something that's a priority for the city, and certainly the legislation allows us to support that as a priority. This very last slide just sort of talks a little bit about the special sales tax in particular, and we have just recently gone through an audit, actually, of our city auditor, and we wanted to get a sense. I mentioned this earlier to you. A lot of folks have asked us a lot about why it is that we put our special tax into the general fund, and so we actually wanted to just do a quick survey to understand how other cities approach their marijuana revenue, and you can see that the majority of those folks do put it actually in their general fund. We also do what we would call the pieces around enforcement and regulation are what we call a soft dedication. So we have we don't earmark those necessarily, but we make sure that we fund those. And from a budgeting perspective, I would argue that we always have the obligation to regulate and enforce regardless of the revenue. So that's but we really try to call that out. And then we try to, as part of all of our budget presentations, even though it's a small portion of our budget, whenever we present to City Council or to the public, we always do call out our projections and our revenue around marijuana because it's a new industry and people are very interested in it. So I'm going to actually turn it over. I think Jeff is next. I didn't want to take up too much time. I know that we're standing between you and happy hour, probably. I'm going to turn this over to Jeff to talk a little bit more about, actually, I have Treasury next. Yeah. So here's the actual money, the collection of our dollars.
Thank you, Stephanie. So my name is Bob Dent. I'm the tax collections manager in Denver. So for a few minutes, we want to talk a little bit about taxes that are relevant for our marijuana industry, some of the tax rates, tax collections, and so forth. So to start off with, let's go to the Denver tax types. So there are several different taxes that in Denver that will be applicable to most of our marijuana businesses that are operating in the city of Denver. And the first one, of course, is sales tax. So all sale of marijuana is taxable in Denver for sales tax, and we'll talk some more about that. Use tax also is, that's remitted directly to the jurisdiction when sales tax is not paid at the time or not a sufficient sales tax paid, and that's remitted directly to the city. Denver also has an occupational privilege tax, and I don't know how many of you might be familiar with this, but it's a tax that Denver charges on individuals that work in the city of Denver. So there's that, and then we also have a business personal property tax as well that we'll talk more about that's on the equipment and fixtures that are used in the business. So the tax rates in Denver for sales tax, the regular sales tax rate in Denver is 3.65%. And so we tax medical marijuana at the standard 3.65% rate. The other rates that you see up here for state, RTD, and the Cultural Facilities District, those three taxes are collected by the state of Colorado. So Denver, as a home rule city, collects and administers its own tax separate from the state. But when an individual comes in and purchases marijuana, they're going to pay a total tax, and then the business is going to remit a portion of that to the state and then a portion of that to the city of Denver. So a total tax there, combined rate, would be 7.65%. So now in retail marijuana, the Denver tax rate is 7.15. So this is a combination of the base tax rate of 3.65, and then Denver adds an additional 3.5% sales tax on top of that for retail marijuana. And the state also has a higher rate for retail marijuana as well. So you can see as a total down there, an individual that comes into a facility and purchases retail marijuana, they're going to pay a total tax of 21.15% on the retail marijuana. Now, Denver also has a different rate for food and beverage. So prepared food and beverage that's taxable in Denver is taxed at a 4% rate. And then just the regular state rates again apply here. So for food and beverage sales, the tax rate is 8%. But as is mentioned on the bottom of this slide, that we do not tax edibles at a food and beverage rate. We tax edibles at the standard sales tax rate. We don't consider that to be a purchase of food. They're purchasing marijuana, so we tax it at the regular rate that we do all other marijuana purchases. So as a combined then, these are the tax rates that would be applicable for a marijuana industry business. So medical marijuana, medical infused products, edibles, they're going to collect 7.65 total on that. If it's retail marijuana or retail infused products, edibles, that's 21.15%. Anything that's not marijuana, like accessories, like if they sell t-shirts or hats or anything else like that, it's again just at the standard sales tax rate, 7.65. And then if they are selling regular food and beverage at their business, then they would be collecting a total of 8%. So there's some various tax rates just depending on what is being sold at the facility. So here's some items that would be subject to use tax. So as we mentioned before, use tax is remitted on items that are consumed in the business, but for which sales tax was not paid or not a sufficient amount of sales tax paid at the time. So it could be something like supplies. So if they purchasing office supplies and at the time they purchased them, they didn't remit any sales tax, then they would remit use tax to the city of Denver on those things. Gross supplies like soil, chemicals, containers, lights, things of that sort. If the tax wasn't paid at the time, they would remit the use tax to us. For infusion and edible supplies like cooking utensils and fuels and things of that sort, and also software as well. Also for fixed assets, so if they purchase some equipment or furniture for use in the business and the sales tax is not paid, then we collect use tax. Grow pods, lights, HVAC, computer equipment, all those kinds of things that are tangible personal property, then potentially use tax could be due on those purchases. So one of the questions we often get is, how does marijuana get paid to us in the city of Denver? So we've broken down the percentages currently of the payment channels that they come in. So first one we have here is cash. So about 19% of our payments from the marijuana sellers come in the form of cash. And while that's substantially higher than it is for the rest of our businesses in Denver, it may not be quite as large as you might expect, particularly for this industry. 34% of it we receive in checks, which can include like money orders and things like that. And then also we have an ACH debit, which is through our online filing. So Denver has an online portal in which taxpayers can go and register their business, and then they can file returns and make payments online and do that. So the majority of, the highest percentage of this industry is using that online filing. And then a small percent pay in credit card, 4%. So another issue around cash that we often get asked about is the security how do you deal with people coming in and depositing large amounts of cash. So just to give you an idea of what our office is like, our tax department is located in the Webb Building. And for those of you who are not familiar with that, it's our government office building where many of the city agencies are located. It's a secured facility, so there's metal detectors and security personnel at the public entrances. So somebody has to pass through that just to get into the building. And then our taxpayer service department is located in the atrium of that building. So once you get in there to the office, we have a fair amount of security in there. We've got 18 high-def cameras in the office, so it's the coverage, the visibility is great in there. One of the things we did too a while back to just add another layer of security and comfort in that office is we now have a Denver sheriff who comes into the office and stays there all day for the 3 days leading up to our tax deadline. So our sales tax deadline is on the 20th. So the 20th and the 2 days prior, we actually have a Denver sheriff that stays in that office all day. And so that provides an extra bit of comfort, not only for our taxpayers that come in, but also for our employees and our personnel that are working in that office. And so at each station, all of our cashiers have a cash counting machine, so they use those. Whenever a dispensary comes in and they make some payments, we'll have not only the cashier, but we'll have a supervisor come, so they both will count the money together there in the presence of the taxpayer, so that everything is visible and there's no questions about that. We also have, of course, a secured vault room, as any place should have, that's collecting cash. And then we also, if we have a marijuana payment come in, we will immediately move that money into the vault, so we don't keep any of that money in our cash registers. And then we also have 2 pickups every day. So the bank comes and takes money from us twice a day. So we don't have large amounts of money in that office for any great length of time. So we've made steps to make sure that we're making sure that we're handling our cash properly and that there's good security in that office. So moving on a little bit more about the taxes. So I mentioned earlier that business personal property tax is taxable in Denver. So this is equipment that a business would use. And this is administered by the counties. All the counties in Colorado handle their own. And so this is on personal properties we mentioned before, furniture and fixtures, computers, office equipment, anything that's equipment that the business is using. There'll be a business personal property tax that the taxpayers will pay annually on that tax. Any type of consumable or an asset that's valued at $350 or less, though, is not subject to that tax. And this is equipment. We're not talking about real property. So real estate and the actual building and land is excluded from that. This is just business personal property tax. So that gets us into a portion of it. We'll ask Don Cordy, who is our audit manager, to come up and continue with this.
I'm Don Cordy. I'm the audit manager with Denver, and I'm just going to share some observations we've had from our audit program. The first one, I think, is fairly problematic for us. Most of the marijuana money that comes in is in the form of cash, and if you're familiar with tax auditing, cash is always a problem. The thing that's different for us with marijuana is unlike a restaurant or bar, it's more difficult to look at the purchases and back into an estimate of sales since a lot of them grow their own. So the cash nature of the business is probably the first problem we noted. Some other compliance issues related to sales tax, completeness of records. That's been a pervasive issue for us. So if anybody's in the business or has clients in the business, it's been very difficult for us to get complete, accurate records. That's caused some of our audits to take a little bit longer than we would like. Let's see. Some of the records that we have trouble getting, just backup for resale transactions, making sure that there's complete reconciliation. The one difference between us and the state does allow an exemption for certain disabled patients. Denver doesn't acknowledge that exemption. That's been a sales issue. We really have not encountered many issues with underreporting of cash sales. If it's happening, we haven't really detected too much of it yet. On the use tax side, Bob mentioned use tax is due when on items that are consumed by the business, if it hasn't been paid directly to the vendor. I think the big issue there in marijuana business is probably educating the employees involved in that and realizing that purchases on the internet are not exempt from use tax. Really, on the use tax side, it's the same as any other business. I have a few examples of items subject to use tax. Packaging, the software, the metric system, growing media, carbon dioxide gas, water filtration, trimming giant supplies, lighting and ventilation parts is a big issue. Water is subject to use tax. Gas and electricity is a big one. Electricity bills are very high in the grow houses. Now, in this case, the vendor usually takes care of that, but if they didn't, it would be subject to use tax. Again, the tracking software, a lot of businesses have software other than the metric system like MJ Freeway or something similar to that. Some of these others are just similar to what you'd find in any other business: office supplies, uniforms, cleaning supplies, shelves and racking. On the grow houses, HVAC issues are a pretty major issue for us. We see a lot of issues with HVAC supplies, security. There's a lot of cameras, security equipment. Cash management supplies, any type of publications would also be subject to use tax. Getting into the fixed assets, a lot of this is pretty standard. Retail display cases, the POS system, computers, software, tenant finish and leasehold improvements. Now, here's some of the issues that are perhaps unique to marijuana grows would be, the alarm system, security stuff, electrical lighting, plumbing and heating. That comes into play in the business personal property side too, which I'll get to next. Water filtration systems. Business personal property tax has been a big issue for us because the businesses are new. I don't think it'll be a long-term issue. There's some misunderstanding, I think, sometimes that HVAC items, which would normally be considered real estate, these are special systems that are not designed for the building, but are really designed for a specific business function, and that makes them subject to business personal property tax. So that's really an educational effort on our part to get that word out. The reason I said I don't think it's a long-term issue is we think most of the businesses will correct this after we audit them, and it's really more of a startup asset issue, or if they grow or expand, then it could be an issue again. And here's an example of some assets that are subject to business personal property tax, regular furniture and fixtures. Most of these things listed on this first slide are the type of things we would find with just about any business in Denver. And then on this slide here, you get into things that are probably more unique to marijuana grows. Basic electrical in a building would just be regular real estate, but electrical upgrades that are specifically for growing plants are subject to business personal property tax. Here's an example of things that are not subject to business personal property tax: land, buildings, software, vehicles, things like that. And I think Jeff is next. Yeah.
Let's find out.
I think Jeff is next. Let's see. There we go.
Oh, I am. All right. All right, so now I'm going to make sure I know how to flip the slides. Just this arrow? Okay. So just as a reminder to everybody, of course, we're talking, this whole symposium and everything is about the two start items. There's two other parts of the market that obviously we're not regulating nor taxing. And that, well, we're regulating a little bit, but the homegrown side of it is not taxed. And it's not part of the market in some ways, but it is meeting demand. And obviously the black market, and in Denver, the black market still exists. There is still marijuana being sold through criminal activities, and that is still going on. So this is not necessarily wiped out that entire side of the market, but it has created some. These are the three primary sources of consumer demand. Obviously, they make sense, but one of the ones that a lot of people spend time thinking about is visitors, and you're going to see a little bit of why that cushions the economy. My goal here is to present the 5 economic issues that I think some people have been talking about: concentration of firms, location, sales, which Stephanie's already shown you quite a bit about, jobs, income in the real estate market. I'm going to really hit on 2 or 3 of those in a little bit more in depth. But throughout, as Stephanie has already mentioned, and I'm sure you've heard over and over again, this is a new market. This is, for an economist, in a really exciting time, because there's very few times that you get to see something that has been outlawed become a regulated market. Nevertheless, we have too little, and the information is way too early to make some judgments. I know these slides are going to be a little difficult for some to see. They are available, but what this slide basically shows you is Denver is the top line, the metro area, which is the rest of the metro area, so it doesn't include Denver in that, and the rest of the state, which does not include Denver. You can see the population and employment. So those are 2 of the primary markets we're talking about. You can see what our share is, and you'll note that we're 22% of the population of the metro area and roughly 13% of the state's population. And you can see what that is for medical centers and for retail stores, and I just use MIPS, which is the medical processing facilities. And you can see that Denver has an incredibly high concentration of these outlets, all 3 of the types. And it obviously creates certain kinds of distortions within the market. In effect, Denver is serving both the metro market customer, the state market customer, and inarguably visitor customers. So we're doing that in many levels, as you can see. So it's not like we're just meeting the daytime population, so people are picking up their medical or retail marijuana on their way home from working here, nor are we meeting the population. We're exceeding that outlet. And you can see what those proportional shares are, and in some cases, we're 10 times the amount of outlets that you would expect from a distribution by population or employment. The second part of this is to think about the locational patterns of these same outlets. And this has been a major issue, or one of the issues that City Council thought about when we talked about the licensing and those types of things. This slide shows you where they are located. To give you some perspective, I'm going to show you where the downtown is. But effectively, if you go to the slightly about a third to the left side of the slide and then come down about a third. That's where downtown is. It's just to the south of where the two interstates intersect, and you'll be able to see a concentration. I'm going to show you two slides and just talk briefly about them. There's obviously tons of maps that we can do, but I just wanted to highlight two. First off is there is something called the low and moderate income neighborhoods. There are various federal programs related to this. There are various ways that we try to adjust those. They tend to be the targeted neighborhoods, but this is where the households that have low and moderate incomes are concentrated. And so this is effectively what some people would say is the more targeted and more disinvested neighborhoods. And if you will notice, there's a high concentration, an overly concentration of especially growth of production facilities, as well as outlets within those grade areas or kind of burgundy type, light burgundy type areas, or they're right on the edges of those. Now that makes some sense. As you've heard probably over the last couple days, many of these outlets and many of the stores have gone into places where there was disinvestment. And what that means is this is the opportunity. This is where the vacancies were in the businesses or the facilities. And so the B and C type spaces where the production facilities have gone, of the industrial, that's where they are. They also tend to be the more older parts of the city. So it's concerning. It's something that has been talked about and not necessarily, it's never addressed, but it gives you some sense of that. This slide shows you by the darkness underneath where the concentration of firms are. So this is where businesses are. Now you can clearly identify that very dark area is where downtown Denver is, and you can once again see the distribution and how that affects with what many would refer to as the daytime population location. So what we're seeing is the concentration and the location of firms tends to not necessarily follow where the population is. It tends to follow other characteristics. And so while the retail and the medical center outlets are both serving a population-based orientation and some degree a daytime population-based, that's not necessarily where they're located. And so then what we can determine a little bit is it's about access, not necessarily about proximity. And I don't want to draw too much of a conclusion because this is still an early market. And in fact, Denver is, as you've already heard, within Colorado, at the forefront of these firms. And so for a while, we were the only place where this was going on, and there were certain requirements that required vertical integration of production and sales that forced all of this to be in Denver. As we see this market mature, we're likely to see a slight change in pattern, but this is the early evidence. The sales activity, I'm going to talk a little bit about that. Stephanie already talked about it. And recognize that the point that I'm going to try to make here is twofold. One is retail sales is different than medical sales, in part because retail basically has a slightly is roughly a 2-year history, whereas medical sales patterns have a longer term history. So we're going to see there's some surprising and interesting outcomes. This is this is since January of 2015. Sorry, I didn't know if I was supposed to answer as my kids or something. This is January 2015, and this gives you some sense. Stephanie appropriately pointed out, we don't know if there's seasonal cyclicality to this particular market, and we're going to observe as time goes, but this is beginning to tell you something, and you can see that pattern. The right side metric is the average store sales, and so you can see how that is changing and adjusting. The reason is we're seeing more and more stores come on, and more outlets come on, as well as more and more outlets come on in neighboring communities. So you would expect to see some outcomes of this, and we're going to look at that. This slide basically shows you, and this is the beginning of those interesting, look, I'm an economist, so I find things very interesting that probably most people don't, but this is about the concentration of it. And what we're seeing in retail, once again, it's very early, we're not seeing a real change in the concentration. The lines basically go top 5 sellers, next, then it's the top 10 sellers, and then it's the top 20. It's not the 5 and then 6 through 15 or 6 through 16, et cetera. It's literally 5, then 10. And so we're looking for, is there seeming to be a concentration? And as if you look, the pattern of those, as well as the pattern below of the average store sales or the top 100, is not really showing any definitive difference as far as some of the behavioral pattern, the sales patterns. And the reason why the two bottom lines align is for a while we did not have even 100 units selling these within the city. Now that we have, those lines will split. As you can tell, it's all versus 100. This is, I always think, the most interesting. However, it's very difficult for some people to understand. In the upper right-hand corner, it shows the sales activity for all firms that are selling, and it shows it over 4 different periods. And so what I'm looking for, or the way I look at this slide is are we seeing increasing concentration of color moving and darkness moving to the left over time? And that's the blue is what you're really looking at. And the earlier years are in the color, or the earlier 6-month periods are in the darker colors. The bottom slide, the bigger portion of the slide, is the top 20. So you don't see much of a change in that distribution. So that's interesting. Okay, now let's look, and so this is what I'm telling you, is on retail, we're seeing it's very early. Same series of slides, same explanation. This is just medical sales. And I'm going to point to something right here. Notice how the top 5 begin to dominate this market now that we've matured this market. This is exactly what a theoretical economist would suggest is going to occur, and is what we've seen in other similar industries like gambling, like cigarettes and others, is you begin to see an oligopoly, a small number of firms increasingly getting a higher and higher market share. And we're beginning to see that where we're seeing some firms starting to dominate and get a higher proportion of it. And here you can see it graphically with the distribution of firms. Notice how on the far left side we start seeing the green and blue starting to separate over time, and the blue and blue building up faster and faster. So what we're seeing is the beginning, and it is literally just the beginning of seemingly a concentration of a smaller number of firms beginning to dominate the market. Now, one caveat here is there are some firms and some association of firms where they're marketing under a similar, or they're marketing a single set of products in multiple locations. This is not capturing that. This is not capturing multiple location. This is capturing individual store sale. Jobs and wages, and actually, sorry, I flipped through that too fast. So here, this is what we're trying to begin to understand, and this is very, very preliminary data. We have not quite 300 firms that we can look at, and we're starting to think about what the concentration and wage levels of jobs are. This has been an issue. What type of industry is this, and how do we think about this within the economy? Miles Light and some other people recently, I think it was on Wednesday, actually talked about using an in-plan model, I believe it was, what the economic impact is. Well, this is really the true measures of that economic impact. Economic impact using that model approach is talking about sales and economic contribution. This is talking about wages and jobs. And it's for a regional or local economy the best way to measure what your economic impact is. What we're seeing is on the production side, and this shouldn't come as any surprise to anybody who's thought about this, it's primarily much more like a light industrial, agricultural, and they're paying in that same range. They're paying $18.50 an hour on average. For similar firms, it's $24.50. Well, that's because this is a bit ag, and it has a low number of employees per production. Because really what you have to do is your highest level of employee usage is going to be during the yield periods. It is not going to be in the grow periods. So as they stagger that grow through, you'll see a slightly higher content of employment, but nevertheless, it doesn't take that many people to manage that many plants. And so what you end up with is a relatively small level of production employment paying, as I've been able to identify in the preliminary work, just under $20 an hour for these employees. Comparatively speaking, then when you look at the med center and the retail employment, so these are the retail outlet store, or the retail stores and the med center stores, we're seeing somewhere around 3,000 employees. And we're trying to gauge this, and I'm going to do a little bit more work on this, but we're seeing them coming in the $12 to $15 range, and right now they're sitting right around $15.50, which is for the comparable, because don't forget these are also like medical pharmacy type employees too. So there is a little bit more, this isn't just cash, running your card or paying cash. You also have to be able to talk about the product. So it's a little bit higher level of a sales and retail experience. They're paying about $15.50. So in effect, what we're learning is where those wage levels are. The next step in this is to actually link it and see what the distribution of jobs within it, because In both cases, especially the retail case, the manager and probably the owner is captured in those wage levels too. And so I would expect to see a few people making a lot and a smaller and a greater number making a little bit less once we can really dig into the next level, which is our next step in this research. Much has been written about the real estate market. The only thing I want to do here is just talk a little bit about, once again, it's B and C properties that tends to get redeveloped. It's also B and C retail properties. It tends not to be your best properties. There's reasons for it. One is they generally cannot have a mortgage on them, and they generally will not be property that's owned by an institutional investor. So any of your major REITs and others will not participate in this, and so they tend to be family-owned businesses or family-owned real estate or other things. And there's reasons for that because, once again, it's not legal in the U.S. It is legal in certain specific areas. The other thing is it's difficult to talk about the true impacts of marijuana grow or marijuana retail on the real estate market because so many things happened all at the same time. We had a major recovery in the U.S. economy, and especially in our economy here. We're one of the fastest growing places in the country on both employment and population, and the second fastest growing central city. We also saw reinvestment. We also saw an incredible amount of activity in some of these locations where fast tracks and other public purchasing of property for infrastructure was occurring. So I would never suggest that the run-up of real estate property was driven by marijuana-related activity, but in fact it did have some impact, and now we're going to find out over the next few years how much of an impact. Here's kind of the summary, and this gets you the overall points. Jobs, we have 480,000 jobs in the city and county of Denver. What I've told you is we have roughly 4,000 marijuana-related jobs. So it is far less than 1% of our economy. Secondly, our wage levels, our average wage levels are around $61,000, $62,000 in the city on average, and this is paying around $36,000 to $37,000. So I know that there was an analogy that this is getting to be as large or as half as large as oil and gas. Oil and gas in Denver has about 8,000 to 10,000 employees, so it's about half, but they pay on average around $120,000 a year in income. So the net effect on the economy is multiplied almost 6 times what this industry is from the standpoint of those kinds of outcomes. I'm not talking about sales, I'm talking about jobs and wages. The retail is beginning to, as Stephanie already pointed out, the retail is beginning to overtake and becoming a more significant as we anticipated. It didn't happen as fast as we anticipated, and there's reasons partially because there's different regulatory environments for both hours of day, age of purchase, types of purchases, and things like that. And then finally, as Stephanie already pointed out, it is about 3% of our total retail sales tax. So to some degree, what I'm suggesting to you is it's slightly less than 1% of our economy, but about 2 to 3%, closer to 3% right now, of our retail sales tax collection. And I'm not talking, as Bob and Don talked about its impact on business personal property, OPT, and others, but I would suggest to you that those are probably much more in line with that 1% amount. So on that's my general conclusions. Those are the observations. I wanted to be quick, and those are hopefully your takeaways. So thank you very much.
Awesome. Hello, everybody, and welcome. Thank you for staying for this exciting, scintillating, and life-changing 15 minutes. You're going to have a good time. I'm Sharon Davis. I am the safety administrator from the Office of Risk Management for the city. Thank you, Molly, for having me today. I want to give a shout out to my Channel 8 friends back there. They're recording this for everybody. So I've been with the city for close to 6 years, and I started out with Parks and Recreation. I don't know if you know this, but the city owns 14,000 acres of mountain parks. In those parks, people decide to come on and start growing marijuana. So we would have to often get with the local law enforcement agencies and have them help us determine who's growing and then to remove all of those illegal grows. So as you know, this is Colorado. This is Garden of the Gods, and we are Ski Town, USA. And this is Colorado. This is an illegal grow, a dispensary, and a proud baker of goods. So just realizing this, workplace safety, it's not just slips, trips, and falls now that we have the marijuana industry here. Now we're talking about making sure that the inspectors, the first responders, everyone who enters any of these facilities are safe when they're in conducting official city business. So we had to utilize our existing safety program to address some of these safety issues. So we have a personal protective, a PPE, personal protective equipment standard. We have a respiratory protection standard, eye standard. I used those and I applied them to this specialized industry. You probably don't know that we have to worry about respiratory protection from pesticides, but also oxygen deficient areas where they're using carbon dioxide to grow the plants. And then you have the UV lights. So when you walk in, we want to make sure that everybody has on eye protection as well. These are things that nobody really thought about as they were walking through these facilities. I did a job hazard analysis. I did a run through an inspection with our PHIs, our public health inspectors, and with the fire department. The first public health inspection I did on a grow facility, one of the inspectors showed up in a very cute outfit. It was a sleeveless blouse, a skirt, and sandals. And I was shocked. And we were walking through, and as you know, the floors are wet, the plants are wet. They didn't really think about it. So that's what I'm here for. I'm here when you go in and you see something and it's just not quite right, make sure you get a hold of somebody from your safety team. On the second inspection I went with this inspector, she had on long pants, closed-toed shoes, and a long-sleeve shirt. We embraced. So I really do want to encourage you to work with your workplace safety folks. You have the opportunity to get ahead of this before anybody has an exposure issue, whether it's to a restricted pesticide, which is going to attack your filtering organs, to the UV radiation for the lights. Even putting on sunglasses sometimes is just not enough. We really don't have many exposure or work comp claims based upon marijuana facilities, and that's awesome. And I think it's because our safety systems are working. People are taking it very seriously. Things that they hadn't thought about before, they're thinking about now prior to going in. And now I get a lot of questions, a lot of emails and phone calls, and I welcome those because something new is always popping up. We thought we had it covered with chemical-resistant suits. We have the booties for our inspectors who are just casually inspecting things and counting plants. Now my understanding is that one of the grow facilities approached our inspector and said, "Hey, do you have roses in your yard?" And the answer was yes. "Well, we want to spray you with this." No. If you don't know what it is, don't allow anybody to apply anything to your PPE. They said it was just simply alcohol. Yeah, it's all simply alcohol until I say something that you don't want to hear and you set me aflame. So I want to make sure that people use common sense and really keep a safety mind. Some of the things that we have to think about now that we didn't think about in the past were emergencies such as active shooter. It doesn't matter where you are, wherever you go, you're in somebody else's workspace. And in a marijuana grow facility or a retail facility, you never know when something's going to pop off. It's very important to have situational awareness, understanding what's going on around them. If you see a dog bowl in the grow facility, watch out. There may be a dog somewhere. So those are the kinds of things that I'm putting in folks' minds so that they can keep themselves safe there. Differing levels of engagement mean differing levels of PPE, personal protective equipment. Get with your folks. We want to make sure that when everybody shows up to the party, they have on the same kinds of outfits. Don't want everybody from Treasury showing up in level B with full face respirators and an SCBA, and then you have the public health inspectors just showing up in their booties and jackets. So we want to make sure that everybody understands the level of engagement that they're working in. Get a safety budget, and make sure that your safety budget for your marijuana PPE is separate from your other engagements. Because you want to have a kit, you want to have a go bag in your car so that you're ready in case of something happens that's different in that institution, that facility. Maybe they applied pesticides that day. You want to make sure that you have something ready for that. And then once you've used it and you leave it at the facility, that you can go back to the office and replenish your kit. Think about it that way. And keep looking at your safety plan. It's all about continuous improvement. I'm lucky enough to work with, once again, to tout our own horn, a collaborative effort where we have police, fire, inspections, treasury, excise, and license. Everybody comes to the table and has an equal voice. And I hear the stories, and I can really put together a cohesive plan for them to keep them safe, and so they can go into the facility, do their job, and not worry about being safe. Training is key. You can do hands-on training like this, where it's instructor-led. We have an online marijuana safety training. We have this platform that we call City University. Anyone who's involved in marijuana operations must go online and take this training. It's mandatory. We've built in questions and answers. You have to answer the questions correctly before you can move on to each of the different modules, and you have to complete the modules. Once the marijuana safety training is completed, the supervisor can go in and see that it's done, and then that person is okay to start their marijuana business. Official city business at marijuana facilities, not their marijuana business. But we want to make sure that you get out there and do the training and have regular refresher training. Don't think that just because you train them one time that they'll always remember year after year after year. Refresher training is very important. So, I'm Sharon Davis, and I approve this message. I want you to know that employee safety is very, very important. You want to keep your people confident that you as an employer are really concerned about their safety. Thank you.
That is all the presenters that we have, but we are happy to take a few questions if anybody is not rushing out the door to a beer on this Friday afternoon. Hi.
Hello, I'm Jacob with Denver Parks and Recreation. I'm just curious, hi Sharon. I'm just curious if there's been a cost analysis of the repercussions to the legalization of marijuana. I know we've got plenty of data on all the money we've got coming in, but do we have anything that's analyzed the associated like societal cost, the homelessness, the healthcare issues, things like that?
The short answer is no, not that I know of. Even just within the city, when we talk about the direct costs that it costs to regulate and enforce marijuana, we're still just talking about those direct costs. And so there's a lot of indirect costs that we've been talking about from the Office of Marijuana Policy with the Budget Office about doing an indirect cost analysis to see what additional indirect costs like the police department might have, or even Stephanie and everybody up here on this panel, those are indirect costs because we're all looking at marijuana and studying marijuana and analyzing it. So even just internal to the city, there's a lot that we will be looking at and learning about. And then pulling together all the rest of the stuff from all the great data and stuff that we've heard from some of these other sessions, public health impact, hospitalizations, crime. I'm not quite sure who the right person is to do that full and complete study, but I'm sure it will be done soon. Well, not soon, but eventually.
I just want to butt in with the financing, City of Aurora, our neighbor that's had just for 1 year recreational sales. Of the next $9 million I expect to get from taxes in Aurora, the City Council very wisely pledged $4.8 million to homelessness. And that's right on East Colfax. That's direct. That's showers, that's food, that's home, temporary housing for women with children. And if Aurora in a year can do this, the state of Colorado with millions in revenue and the city of Denver with millions in revenue should really also, I think, take some national leadership.
I appreciate that. I know that we keep talking about the different kinds of things that we're trying to do with our city dollars. We have tried really hard to talk about our dollars as a whole. As we talk about our 2017 budget, for instance, we made affordable housing a priority. I don't know if many of you saw that we actually increased the number of police officers in Denver. We continue to work with our Denver's Road Home folks to make sure we have. I think that the part we're trying really not to do is to just only look at the marijuana revenue, but really look at our dollars as a whole and recognize how important it is to address all those issues holistically. If tomorrow marijuana became illegal or something was to change around that revenue, I think that we certainly wouldn't stop trying to support and address some of the issues that we have as a growing community. I think the other part that we try really hard to talk about is whether or not homelessness is a direct correlation to marijuana, I think is a slippery slope. We all know that people are moving here, both to Denver and Colorado, and I don't think it's only because of the marijuana. I think that would be a really poor assumption. Jeff pointed out a lot of the kinds of things that are happening in Denver and some of the growth that we have seen, and I think it's more, I think maybe it's when I leave the state, I try to, but we are actually about more than marijuana, right? And so I think we have tried to really think about our needs as a city holistically and trying to address some of the challenges that we face, not just with marijuana money, but with all the growth that we have seen in our sales tax. So I appreciate, and I know that we have worked really hard to figure out different ways to address both homelessness as well as crime, as well as just our basic infrastructure as a city as we begin to grow. Thank you.
Hi, Craig Reed from the Association of Municipalities of Ontario. I've got a question that I think is fairly simple but fundamental, and it's come up a few times yesterday from the gentleman from Pueblo. It came up in Jeff's presentation, but I don't really know who to address it to. And it's about the concentration of marijuana businesses, particularly in Denver. And I know there's some factors there about who has voted to legalize, and that has affected concentration. But has there been a regulatory or legislative element to that? You spoke about vertical integration. Has there been a need to have grow operations and businesses locate in the city in any way? Or am I just sort of conflating a bunch of different things?
I was looking for Molly to answer that question as opposed to me.
I can chime in too.
So there are, obviously, as has been pointed out in previous sessions, there are regulatory and zoning issues that are related to the locations, both for the grow as well as the retail, but primarily the grow, the distances as well as the types of spaces and the improvements have to be made. As far as I think you're also hinting at, are we encouraging those businesses to come here? Is there any policy that would suggest that we're either encouraging or discouraging firms from locating in Denver? There has been, to some degree, and I would say to a great degree right now, neither approach. We're neither trying to encourage firms to concentrate in Denver, nor are we trying to discourage firms necessarily doing that. That's not what the role, or that has not been the focus of the city. The assumption has been that the voters approved this, and that as long as it's within the safety and health, such as zoning and licensing and those types of things, and we can maintain that's really the primary issues around location. I also would suggest to you once again, from looking at the data, and we've been watching it now for about 3 years or 4 years from a locational standpoint, that it's partially the market that's driving this. And so there are a fair number of places within Denver where property values literally have quadrupled. And so clearly, if those firms got located when they were cheap, they're still there. But in many cases, we're going to see this evolutionary market. Real estate markets move not slowly, but relatively slowly. And so it will take 5 or 10 years for us to see a real distributional pattern. But the early indications are what I showed you.
Thank you.
And I would just add a couple of things to that. There's just been a lot of fascinating trends or elements that we've seen with this industry that we just wouldn't have expected. I mean, I think Sal Pace touched on it yesterday about the free market just not applying in this case. And Jeff would be better to say this than I would, but any kind of time that we've expected the free market or market principles to kind of drive the industry in a certain direction, it just hasn't had that impact that we've expected it to. I mean, licensing is a great example. We have, more licenses in locations in Denver than we do 7-Eleven, Starbucks, and I think McDonald's combined, but yet sales are dropping, but we're still continuing to increase locations. So, why that is, I'm not quite sure. So, but like I said, I think there's just trends that we weren't expecting to see that we thought the free market or some kind of market principles would have handled that weren't. And as I think Jeff mentioned it too, there's lots of regulatory or legislative changes that have been made that impact the concentration, and a lot of that is just jurisdictions opting in and out. And Denver kind of having this boom pre-retail, when medical first took off, a lot of those locations just started out in Denver. And so Denver's continued to kind of be that epicenter for the state. But that is starting to change. Over time, we have Denver is getting a decreasing percentage of the amount of licenses throughout the state of Colorado. So like Jeff said, it's just too early and too little information.
Appreciate it. Thanks.
Oh, yes, hi.
Hi, thanks. I'm Pat Oglesby with the Center for New Revenue. Thinking about the 3.5% extra tax that's only on marijuana, do you think that's the revenue maximizing rate? Do you think if you raise the rate that folks would go to other jurisdictions and then get a better deal, and so so raising the rate would be a revenue loser, or how do you analyze that?
The budget manager refused. No, I'm just kidding. This is the problem. Is economists know a lot of things, and so we have to answer a little bit about a lot of things. Now, the reality is there's a robust conversation. I'm trying to remember, but roughly 3 years ago about what that rate should look like, and how that should work. And there's a number of different ways to think about tax policy, and you're kind of inferring one of them, which is a profit maximization approach, and I can appreciate that. I think the city in this particular case took an approach that was trying to get closer to what is the anticipated costs. And as Stephanie pointed out in many of her slides, we both aren't completely sure. The earlier question about have you done a cost-benefit analysis effectively, we're not quite sure about it because, again, we have nowhere we can really search and learn this. We are, and Seattle is effectively the experiments of this once illegal activity that has now become legalized. And so we didn't look at it from the stand of a profit maximization and figured, well, we could adjust it to do that. The elected leaders of the city took a different approach, which was to think about what is the impact and the likely cost to provide the services and the related things. So the inherent part of your question is it's a political conversation much more than it is an analytic, which is why Stephanie didn't even want to tread into this water, but I live a little bit on the political side at times.
Actually, Molly wanted to talk
Well,
about the ordinance.
yeah, so I'll just add too. So the ordinance right now that created the 3.5% special sales tax, it is a floating tax. It can go up to 15% without having to go back to a vote of the people. And the state tax was actually, I'm not sure what their max, their ceiling or their floor is, but theirs was set at 10%, and in 2017 they're decreasing theirs down to 7%, maybe 8%. I can't remember. So but what's interesting about that, I mean, one of the reasons for decreasing it is to try to find that balance or where that, that tipping point to see if it drives any sales, from the black market into the regulated market. So that's another element where we will continue to look at that over time to see if the 3.5% is the right balance, and we'll have that ability to go up or down if needed.
Hi, David Woolsey with San Jose. A question for you on your taxes. Do you only apply it at the retail point of sale, or are there other taxes along the way? Do you provide wholesale exemptions? Do you tax cultivation by square footage? Any other intermediate taxes along the way?
We don't do anything based on square footage. The sales taxes is on the retail sale to the end user. That fully answers your question. So it's a little bit different than the state that implies the excise on the wholesale or resale transfer, but ours is just on the sale to the end user.
The state does have an excise tax. I think it's at 15%. And I was going to add something, but I lost it. Sorry. That's not a great note to end it on. Anybody have any other questions?
Sure.
Yes.
Hi, Greg Miner with the City of Oakland. Sort of have 2.5 questions. But the first is essentially, of the different cannabis uses, which have you found, produces the most in revenue and the most in jobs? And so that's sort of my 1.5 question. And the other question is, with respect to real estate, do you have a sense of what other industries perhaps are being displaced by cannabis uses, and whether or not I guess this is like 3 questions, and whether or not they produce the same or less amount of jobs, for example, in comparison to a cultivation facility?
So as you could probably guess, I could spend hours talking about any one of those 3 questions. So instead, I'm going to spend 15 seconds and just give you soundbite answers. As far as what may be displaced, and I'm hoping I remembered all 3 of your questions, but as far as what may be displaced, what we really believe it is oftentimes those innovative businesses and those innovative industries. These are oftentimes the cool, hip, what maybe become cool and hip, warehouse spaces, those types of places, and so, or arts for that matter too. So it's those types of activities that we're going into, we'll call it $10 space before, that have now been priced out in particular locations. And so it may be taking a little bit away from the innovation and from that. As I pointed out in the slide, comparable, and it's very difficult to get comparability of similar industries to suggest that if we were to have those types of firms in that location, what would be our revenue yields, whether it be property tax or jobs or income. But part of this is happens in a very diverse economy, which we are, is you want some industries that are heavily intensive to paying sales tax and others that are heavily intensive in paying in wages. And so I'm not sure that there's a good answer to that question as far as is this yielding more or yielding less revenue or sales and economic activity. I can only report what it is, which is, I would argue it's roughly 1% of our economy at this point. And the other part of it's inherent in your question is was that there in the economy before? So did our consumption or our purchasing switch to this was all black market sales and now has become legal sales? And that part I can't particularly answer because that's speculation. I mean, how do you go to people and say, would you have done an illegal activity? That's usually not a very good revealed answer or stated answer. So help me with your first part, though, because I think I got 2 or 3 elements. So what was the... Good.
I think you essentially covered it.
Okay,
The
I just want to
first
make
was,
sure.
if you could identify of the existing uses which produces more in revenue
Oh,
compared
thank you.
in jobs.
And in that one, honestly, I haven't gotten that. I'm trying to get more and more depth about the jobs and which ones are coming from. But here's the inherent difficulty within that. And I am not the expert. Molly is far more the expert, and many perhaps several of you in the room have now become experts over the last few days. Many of these businesses hold multiple licenses. And so it's very difficult to kind of extract in some of the data which license it is that they're relating the employment to. So as an example, let's say firm A is operating both a retail and medical operation. I don't know which side that's coming from. And so I'd have to have, the only way we could do it is if we could distinctly separate, and the data that we use for employment is the quarterly employment, the unemployment data, because that's where you report your wages. It's called QCW data, and that will not separate out by license type. That's only separated out by firm name. And that's what the relationship we're trying to do. So I can't answer it on employment. I can't answer it on wages at this point. The only thing I can do is tell you what the total is, which, by the way, I think is the first time we've ever really told people, well, it's the first time I've ever discovered exactly what I think the wages are. It's for today. So as you can tell, we are infantile as far as some of the analysis that many people would love us to know. We just don't know, nor will the data allow us to know it. So thank you.
All right, so I think that will conclude us. And just a couple of closing notes. Thank you all. We very much enjoyed this, so we appreciate you all coming. You will receive a survey today, so please take it and give us your thoughts. And we will share email contacts and slides online and with all of you next week. And then, as always, contact the Office of Marijuana Policy if you have any questions. We can put you in touch with the great Denver resources or other states and cities that we work with as well. So thank you all very much.